Anurag Singh is with us, managing partner at Ansid Capital is now with us. Anurag, good to have you with us here. Thank you for your time. I mean, of course, yesterday, I reckon would have been different had it not been for, of course, all the Adani news flow. So where are we now, in your opinion, Anurag? For those who are watching, not just for trading the Nifty or this stock or that stock, but broadly how to kind of look at the market and whether one should be looking to buy things or sit on the sidelines. Where are we at in terms of answering that question?
Prashant, morning. I think, Prashant, if you look at Indian markets, I think let's just look at this broader perspective. I mean, go to 2019, Nifty was somewhere around 2020, start of 2020, it was at 12,000. And I would say, assuming a 12% CAGR per year, I mean, you expect in 6 years, Nifty doubles. So I think even if Nifty absorbs the 2025 year, by end of 2025, it's at 26,000. I think that's a reasonable return to expect. I think that's where I see Indian markets heading to, Prashant, especially in the context of, so much money trying to catch the rally within US and some of the other tactical rallies, say Argentina, say Japan, say somewhere else, maybe in Europe if the war ends, right? So broadly, this is where I think, and ultimately this is in line with the long-term trend of Nifty, Prashant. So I mean, I understand there is a bit of a panic right now. Small cap and mid cap is a very different story. I think investors better know what they're doing in that space. But I think broadly for the markets, I think it's a story which really ended up with taking a spike in 2021, 22, 23, and now settling down with a more moderate average 12% CAGR for the returns, which is in line with the broader economy, Prashant, I think. So that's where I stand. That's with respect to the Indian markets.
Anurag, hi. So you're unfazed. Good to know that. In which case, what would you like to buy in India? I mean, the market is off 10% off the peak now, and stocks, many of them are down between 30 to 40% off the peak.
So, Surabhi, I am unfazed because I'm not, so let me explain you the context. We are 90% in US markets, 10%. So I think we are not typically, our fund is not a replica of how you should take positions in emerging markets, because we don't take more than 10 to 15% positions in any emerging markets at any point in time. So I'm unfazed because I'm here in US markets and you know what it is doing these days, right? So that's all good. But I think having said this, I think, Surabhi, our approach is very macro, very top down, and we don't really indulge into anything beyond Nifty top 100, right? So we stay within IT, discretionary, consumer, and banking within Indian markets, right? And that's a very macro view. Just to quote an example, Argentinian market is like 45% up in year-to-date terms, right? So we take such tactical positions. That's in no way is an indicator of how Indian markets should be doing or should be, where the potential lies. So yeah, currently I would say we are only positive on banks in Indian markets. Everything else is super expensive. It needs to take a time correction. And that's just a tactical call. It's no way a judgment of how the growth should unfold in Indian markets. Surabhi.
All right. Got it. Hi, Anurag. Good morning. And good to see you in. We keep asking guests whether, how to view India, how to view China. Do you think post-Trump coming in as US president, you could rather see broadening of the US market rally rather than money moving to other emerging markets? Because I'm just looking at the last few days, the Russell 2000 on a day-to-day basis is outperforming, which wasn't the case a few months earlier.
Yeah. So, Nigel, look, Russell did not even touch even now, it's below its 2021 peak, right?
Yeah.
So it has still not touched the 2,500 levels, right? So I think that has been the challenge with this rally. Even, we understand US markets in a lot of ways, people say is expensive, but it is so concentrated in these 7 stocks. And it's only now for the last 4 or 5 months that the broadening has actually really begun to unfold, right? Even we see on a daily basis, there are stocks which are gaining 5, 6, 7%. So, and that's not a froth, because it's really catching up to the high multiple rich valuations and the safety trade of the technology, super big tech trade. Now, I think in terms of, look, Nigel, we don't have to take it as a country specific view. I think these are all tactical calls. India is the bright spot. China is just a trade. I don't think, and people I talk to, Nobody's making the case as China is turned around for the long term and invest there and go to sleep and all that. People are just taking the tactical trade. These are all tactical positions. India is the only market where people say it's a consistent, bullish, 20-year decadal story. I agree with that. However, the fact is that you should not hesitate to take money off the table when you feel that there is a bit of froth in the market. And I think today we are at that point where some money should be taken off the table. Nigel.
All right, Anurag, we leave it there. Good conversation as always. Thank you very much for joining us and being here on the program today. So, I mean, that's the first opinion coming through, and we'll get you a lot more.